Again, it should automatically bring you there. It should immediately bring you there, chat. So don't leave. It'll bring you there. I'll see you guys over there. All right, we got our day trading stream. Let me know if redirect worked as soon as you get in here. Let me know if redirect worked. NVIDIA flying down here, dragging everything else down with it. A lot of other stuff under some major milestone levels. This should have worked, I think, right? Let me know if it redirected over here. It should have worked. Yes, it worked. Okay, cool. All right, guys. Market opens up in 16 minutes. Cool. We're down a little bit today, just a little bit. Trying to see what kind of... Pull this up a little bit. Shrink this so you guys can really see it. There we go. All right. What's up, Asif? You type fast, turbo? We try. Definitely top 3 fastest typers in the world right now. Let me see my day trading thing. Let me find it. Again, we got ISM manufacturing PMI data today. A very big report. A very big report. All right, so manufacturing PMI drops at 9:45 a.m. Put this up on screen. There we go. What we got for the ISM PMI? Good to hear your thoughts. Yeah, so ISM PMI is a big report. Jiu-Jitsu is okay, I guess. I mean, yeah, it's all right. Definitely top 3 sports in the world right now, but it's okay. You don't have to agree with me. Where's Mike? Mike, where have you gone, bro? Did redirect leave you behind? Never let go, Mike. Never let go. You know. What's the ISM? ISM is the Institute of Supply Management. ISM PMI data today. Big one is ISM PMI prices and PMI data. ISM PMI is expected at 48.8. Last time it showed up at 48.5. If you don't understand manufacturing PMI data, chat, manufacturing PMI, again, we might buy this dip, or we might, like, look, we're getting pretty close to the previous close. I'm going to buy this up. PMI data is strength or weakness in manufacturing specifically. And so a higher than expected reading shows more strength in manufacturing. Over 50 is an expanding manufacturing sector. Below 50 is a weakening manufacturing sector. And today they're expecting roughly 49 for ISM PMI data. Roughly 49. We're going to add a little bit more to this. But yeah, so basically they're expecting a slight contracting manufacturing sector. And manufacturing will move markets, right? Like, this data will move markets. It will be a big influence over things. And again, we'll see what happens, chat. I'm excited for. What are your predictions for ISM PMI? Let me do a poll. MicroStrategy. Yeah. So let me do a poll. Are you bullish or bearish on today's ISM manufacturing PMI report? Bull, bear, vote on the poll. Let me know how you feel. All right, well, we got a little bullish bounce here and we took profit. So we're green on the trade overall, but now we've kind of contracted all the way back down. Vote on the poll. There's the link. So now we're completely flat on this trade. Testing lows right now. Depends on whether we think NVIDIA is going to keep falling. We can play with it. Oh my goodness, man. What a drop. Oh no, I added to it. I didn't want to add to it. Oh no. I didn't mean to add to it. Yeah, I gotta get out now. I meant to sell. We ended up just making the problem worse. It's all good. Big dumps, honestly. So the market's coming all the way back down. SPY is mostly flat today leading into this report. I wonder how influential it is. And I'm guessing we're going to have choppy behavior based off of Apple and Amazon earnings later, which are huge reports. Anyways. ISM PMI coming out today. Big report. Massive pullbacks here. I'm gonna have to sell my position in the SPY. Basically flat over the last few hours though, so could have been worse. All right, chat. We got 13 minutes until the market opens. 13 minutes. Be ready. It's a low interest day. I'm seeing everybody all the way around pretty low lowish views. So, honestly, less interest, man. I think the election has got people scared. People are nervous. They're apprehensive. I've been getting my butt kicked in day trading, too. Now, we will keep trying here, though. And if we get too bad here, we'll just swap out. I do see Nvidia starting to bounce right at that previous closing price, so I'm hoping it sustains, but we'll see if Nvidia can keep it up. Again, remember, chat, today we also have Apple, Amazon, major tech earnings, chat. Yeah. Well, the drop happened so fast, I got nervous, right? So I tried to cut it fast, and I ended up taking the wrong direction because, you know, when you're shorting stuff, you buy and sell. Like, selling shorts things and buying covers things, so it's the opposite. And so if like you really have to try to get out quickly, you got it. Sometimes you just make brash decisions, and that's what I did. It's all good, like I said. We're kind of flat this week, to be honest. We made a bunch of money earlier in the week. We gave it back later in the week. We'll see if we can make it back today. My equities portfolio is pretty green on the week, though. I'm also about to get my first T-bill dividend, which I'm really excited about. If you don't know what T-bill is, T-bill... hold on. All right, we took half off just to protect the trade. T-bill, TBIL, is a Treasury bond ETF that pays me monthly dividend payments, right? If you see here, yes, I'm down 250 on the day, but this happens every quarter, or every week this happens. If I put up a weekly chart, like every 4 weeks, 1, 2, 3, 4, 5, I guess, or every 4 weeks we have this dip and then we rebound right back. So the point is, I'm not actually down. And the good thing about this is, like, if you see my position, I've got 1,400 shares of this T-bill ETF, right? They pay me about 5.3% interest on those. So if you look at the price currently at about $50 a share times 1,400, this is a $70,000 position times $70,000 times 0.54. So they're going to pay me about 5.4% in interest. Whoa, my math is wrong. Sorry, I forgot a zero. It's about $37.80 a year, right? And annualized, it's about a little bit under $4,000 a year. If I divide it by 12 to get the monthly dividend payment they're gonna pay me, I'm going to get over $300 a month in dividend payments just by letting my money park here for now. So I don't mind. And again, I get my first juicy dividend payment. I'm excited about it. I mean, I don't even care that much, but I'm semi-excited about it. We'll see. You know, what's your favorite Treasury bond ETF? I know there's like BIL is one. These are short-term Treasury bonds. So like 1 to 3 month is what it is. Speaking of that, I gotta pay Pawn. Sorry, Pawn. I'm sending you your money right now. Yeah. And there we go. All right. We're actually pretty green on these last two contracts here. We'll take another piece off there. Only down about 90 bucks. Starting to fight back. Nvidia's rebounding is what this is. We'll play with our little one contract here. This is T-bill. TBIL. It stands for Treasury bill. TBIL. Right, exactly, Big Hoss. Like, you know, you hear people all the time push other investment vehicles like certified deposits or like buying actual Treasury bonds. To me, it doesn't make any sense. We're going to go ahead and cut this. To me, it makes no sense, right? Like, why would you, like, the liquidity I have with this, I can sell this whenever I want and be fine, right? I can liquidate this position anytime I want, right? Literally anytime I want. And so why would I lock my money in a CD that's going to pay me basically the same thing, about 5%, but I'm going to have to chase different bank accounts around. I can only leave it there for 8 months, and then I have to withdraw it and find another bank or certified deposit account to put my money in and then just chase that for 5%. I can literally let my money sit here. And if I'm not spending it, it can stay in my brokerage account. They'll pay me monthly dividend payments into my account. Like that versus a CD. You know, give me your arguments for CDs in chat, but this is much easier. This is automated versus having to basically chase a certified deposit account around. You know what I mean? Like, it just doesn't make sense. Robinhood pays 5% cash sweeps? Wait, so Robinhood pays you 5% just for letting your money sit, or do you have to have some specialized, like, account? I thought you had to have some type of specialized account with them. Yeah, you're at the whim of rates, and so if you want long-term guaranteed rates, it's different, but... No, you need the gold membership. How much is the fee? I prefer MP3 over CDs. Yeah, listen, I grew up in the 90s. Limp Bizkit CD was thriving in my house, you know. Linkin Park CD was thriving in my house, you know. Who else did I listen to? Blink 182. All the, like, it's kind of funny because now young people like the music that I listened to when I was a kid. Like, they dress the same, too. Like, in 5th grade, I had Jinkos, alien Jinkos, with, like, a wallet chain, with, like, spiky hair, and, like, now you go look at the kids in freaking middle school now, they look the same, kind of. They listen to the same music, too. So, like, what was our Tom Petty, or what was our Led Zeppelin, and what was our, you know, Pink Floyd, is now their Limp Bizkit. It's corn to them, you know. It's funny. It's funny how that works. But anyways, we got 4 minutes, chat. 4 minutes. $0.50, $5 a month. That's not that bad, actually. I don't know if I trust Robinhood, to be honest, but eToro gives me 3% just because I only have 10K plus. You can get fat platinum. Jinko with a wallet chain. Oh, dude. Do you remember the 90s, bro? I actually grew up in the 90s. A lot of kids that were born in like 98 try to act like they were 90s kids. There was a drastic difference between style in the 90s versus the early 2000s, right? The style of the 90s was like super baggy, grungy, spiky hair with gel, bowl cuts, wallet chains. The style of the early 2000s was like mostly preppy. Like, I was a skateboarder kid, but I also dressed preppy because the girls liked preppy. And so, again, if they liked orange bunny suits, I'd run around in an orange bunny suit. It wouldn't matter. But yeah, just a different style. Yeah, so you know Daphne. You know better than anybody. Graduated in 97. I graduated later than that, but you get it. Do we want PMI to be higher or lower? See, that's a really... My favorite word is nuanced. That's a really nuanced answer, which is that we don't know. More manufacturing could mean lower prices, but it also could mean more economic growth and higher prices. You know, you don't really know. Manufacturing is harder to judge in that way. What it will show you is strength or weakness in manufacturing, and the relevance is important. Oh, the Offspring. Oh, I love the Offspring. I probably like the Offspring better than all of them. You know, the Offspring arguably had better music too. Dexter is actually like a freaking scientist. Dexter's Lab. His name's Dexter, right? His name is Dexter. Dexter's Laboratory. There's a lot of jokes about that, I'm sure. But he was actually a scientist. QCOM breaking down a little bit, though, guys. Dragging the tech market down. Look at QCOM. QCOM. QCOM had earnings yesterday. Went up a lot. Now they're falling down fast. They're down to 170s here, chat. 170s. And this is on the... This is preceding, again, two major stock earnings reports this afternoon. Now, we're going to stream the entire thing live. We've got Amazon earnings. We got Apple earnings. Both live. Both will be streamed live. Yeah. So we got Apple and Amazon earnings today, guys. Be ready. Does T-bill dividend go with the current interest rate, or is it somewhat detached to it? Well, it's related to it, right? T-bill is 0, or is like, I think 3 month. T-bill is 3 month. Yeah, 3 month. 3 month bonds. And so the rate of 3 months bonds, like if I pull up Chat GPT here. 3 month rate of Treasury bonds is... Look at QCOM falling down here, chat. Dragging the Q down. 5.14% right now. So it's based off of this at 5.14%. But it does fluctuate as bond prices fluctuate for short-term bonds. Right now, the yield curve is inverted, which means that short-term bonds are paying higher yields than long-term bonds. If you look at like TLT, long-term bonds are paying worse than short-term bonds in a lot of areas. But the yield curve is starting to go closer to neutral, is what I'm seeing. So, all right, there's the opening bell, guys. We got the market open live right now. Wait, what the heck? QCOM bouncing up a little bit. Oh, I forgot I have the strict reversal indicator on this chart. See, what's weird is I built this indicator and it's only a long indicator. For whatever reason, some error in the code doesn't let it show up short. But it's very accurate at predicting short-term bounces. Like, very accurate. I call it strict reversal. Do y'all want to see it? On TD Ameritrade, I call it strict reversal. Like, it's incredibly powerful at predicting short-term bounces. Honestly, looking at this code again, it doesn't show up a lot, though. It only shows up, like, once every other day. But when it does show up... Alright, guys, market's flat since the opening bell here. We're going to put NVIDIA up on the chart. I get NVIDIA at 117s here, chat. NVIDIA at 117s, so... Let's see if Nvidia holds at the previous closing price. This is a big if, to be honest. This is a big, big level on whether it's going to hold. Yeah, I got my first spam bot back a couple days ago. See though, dude, check this out, man. So again, I'm going to show you this indicator again too. I wonder how it looks on Nvidia. So here's my indicator, right? 1 minute terms. Look at it. Look at this. So this is my indicator. Here's Nvidia. Again, this is not even the strict reversal one. So this is a different one that I use, that I've built. But again, look at the bottom prediction, boom, bounce. Sell prediction, boom, dump. All right, so again, I haven't even tracked other individual stocks on it, but see, look at this. Very nice. Look, literally predicts bottoms too. Look at that. Literally predict the top as well. So again, you're gonna hear more about this indicator, but it doesn't work every time. Nothing does. All right, so we're getting a bounce back up here. That's the first one that didn't work right there. This one worked too, but like, look at this. Bounce, dip. This one is wrong. Look at that one though. That one worked. Yeah, but the other one I have built. Look at the Nvidia bouncing big at the opening bell. The other one I have is called strict reversal. And it's not perfect either. I was looking at QCOM, but this one only goes long. And it called this bounce in QCOM. Look at that. That's why I initially said something, is because it showed me right here. High probability of a bounce. It only goes long. I can't figure out, like, but look at the bottoms. When it shows up, really nice follow through. I'm gonna see if I can find one that didn't work on it, but yeah, like, look at this, predicting bottoms. Like, look at it, literally predicts bottoms too. Look. So we're still working on it, but when it shows up, I'm gonna keep developing it, and we'll see what it looks like when it shows up. Like, look at that. Another bottom pick. It does really well at predicting bottoms. Doesn't show up every day. And I think the more I try to boost the, like, how much it occurs, the less accurate it'll get. But look at the bottom predictions here, man. I think you got to give it, like, a range, but I'll keep updating you guys on it and how it goes. SPY making moves here. You know, and again, the other one I have is this. Like, if we look at the SPY as an example, like, here's today on the other indicator. And again, you'll see more of this one too. We're developing some cool stuff in the background. Look at the top, bottom, top, bottom. So 4 for 4 in pre-market. We'll see what happens after the opening bell for these. I'm letting the opening 5 minutes play out. We've got nice bounce backs in the opening 5 minutes. Yeah, very flat, except for the SPY and Nvidia. Yeah, so Roblox is out. Yeah, this is TOS indicators, but I have them on TradingView also. My wife just started that series with me, Dexter. I haven't seen it, but she just started. I don't know if you're talking about Dexter. Yeah, because Sharkeys, what you're saying, so Sharkey says, why don't prop firms take the opposite side? Because that would be kind of something that CFD traders do, right? Because it makes sense, and I'm not even mad at it. Like, look, if 90% of traders lose, just inverse their trades, and you'll make money. It's more nuanced than that, though. The real problem lies in that, traders lose from a lot of different reasons. Like, they add to positions when they shouldn't. They sell when they shouldn't. Stuff like that, right? So it's not as easy. It seems like it would be, but it's not. Anyways, we're going to get this indicator off the screen. Put my VWAP back up. All right, we're down about $100. I'm going to buy this dip, see if we get a quick little bounce that we could scalp into. We're out. So again, we're only down about $75. Yeah, people are weird, you know. Yeah, I'm watching Nvidia pretty closely here. The Q's dropping down some, but all right, look at SPY bouncing right at the 200 EMA VWAP level, like right there at that spot, testing highs of market hours at least. So the SPY is trying to get up there. PMI data, there's one at 9:45 and 7 minutes. The big one, though, is at 10. So again, there's one at 9:45 and 7 minutes. The big one's at 10 o'clock. SPY bouncing up. Watch Nvidia, though. I think Nvidia is one that you want to watch closely here. All right, chat. Yeah, the ECB. SPY still looking pretty good, guys. SPY bounced all the way back up. We're about to run into some resistance levels, though, and we're kind of top of the range here. So, all right, we just took half off. Gonna add to another winning position. Take another half off. Kind of got stuck in the. There we go. All right, so we're only down $50. So we were down a couple hundred at one point. We've slowly chopped away at that. We're only down $50. We're gonna see if we get a better price. Can you guys hear some weird static noise? Or is that just pawn? So if you're using new AirPods, pawn, they react very strange to computers. I heard it has stopped. Okay, cool. All right, look at this huge run. Wow. Again, we're probably gonna short the top here. Very risky strategy here, guys. So you just gotta be prepared to eat it if you're wrong. But I think it has a high edge of being right. We're out. Scalped a little bit more. We're only down $39, so we're basically flat. We're gonna start taking larger size now that we're a little bit more comfortable with our risk of the day. All right, we got 6 contracts. Bad fill, but that's all right. PMI data drops in about 4 minutes, so we're looking to attack choppiness ahead of it is what we're doing here. Well, got out green somehow here. We got one contract left. A whirlwind of emotions. All right, I'm out. All right, well, you know, down $23 on the day. Yeah, that might be what it was. All right, guys, we got 2.5 minutes until PMI data drops, right? The big one is at 10 a.m. Again, the big one, 10 a.m. today, chat. Do I want to play with another position? 2.5 minutes left. I think I might. I was going to add to it. Would have been a good add, but definitely not now. I'm going to get out there. So we're down 59 bucks. Could be worse. Nvidia just broke highs right before PMI data. And again, so we do have Chicago PMI data coming out now, right? So we have, no. We have regular manufacturing PMI for July. It's not the big one. The ISM one is the big one. This one's expected at 49.5. The big one is ISM PMI data at 10. It's expected at 49 roughly. So this isn't the big one, but the big one's coming. All right, we'll try to scalp it one more time. We're playing with fire a little bit here, but oof. Yeah. A little bit too risky. Man, look at the SPY and the NASDAQ just pump right now. Nvidia's up there. Look at the SPY. It literally broke all the way above these levels. Cool. I'm okay with it, I guess, even though we lost a little bit in our funded account. We got Canadian PMI data too. All right, guys, here we go. Here's the first report in about 30 seconds. First report's about 30 seconds. Manufacturing PMI is what this is. The big one, again, this one's expected at 49.5. The big one drops at 10 minutes and 15 minutes. It's expected at 49 or 48.8. All right, here we go, guys. 20 seconds. And we'll have about a 15-minute window to day trade before it gets too volatile. Roblox bounced. All right, guys, here we go. Here's the first reading. And first reading came in at 49.6, slightly higher than expected. 49.6, slightly higher than expected. Again, subscribe if you haven't yet. We do this live for free every day, and we cover it faster than everybody else. 49.6 is what we showed up as for manufacturing PMI data. 49.6. All right, so we got a little window to day trade now. I know I'm trading like really risky here, but all right, so we're only down 70 bucks. Little green trade. Let's slowly add to this one too if I can. Man, dude. I keep wanting to short the top. Probably should just trade with the trend. The reason I'm cutting this, Nvidia is starting to break highs again, man. Over 120s too. Hey, thank you, Tiny. So PMI is the Purchasing Managers Index. ISM PMI is Institute of Supply Management data. Man, we are just getting punished here today. I'm gonna have to close it down on this account. I just don't want to risk too much. I mean, we actually rejected at the top, but yeah, we're just getting punished today. Trying to day trade this. Nvidia is too strong. You know, we'll come back to it. You know, the market's really squeezing up ahead of the ISM data, so we'll see. Like here, I'll put up Trade-A-Bait. We got a couple funded accounts. This next one we're up thousands on, so. Big volatility today too, to be honest. Let me pull this up. Alright, so we actually did get into a green trade on this other account with one contract. A little bit less emotional of a trade, but yeah, I'll show you this last trade here. Same account. Yes, baby. No. Okay. Alright, love you. Okay. Now we probably took a little bit too large of a risk just now trying to trade it. But we were down hundreds, and so we're now back down to $130 loss. A little bit more reasonable. Alright, look at the strength though. So we are approaching big levels here. I'm going to short the top of this. They say the definition of insanity is continuously trying the same thing, expecting a different result. But I learned in trading, eventually something usually breaks. And so that's what I'm trying to capitalize on. If we can get a pullback large enough for it. Alright, we're flat. Green. Alright guys, so we finally caught the pullback. It took us a while, but we're trading micros, so we're trading small enough to where, you know, so we're back down to $50 down day. We had this 120 support level. I assumed it was going to reject off of that level, but and again, we were right. We did reject off of it. It just took a little bit of time. Again, this is the same account. Yeah, you can kind of see the same thing here. You can see how many positions I've taken, so. Too late to buy Meta? I mean, it depends on how long you're willing to hold. A lot of major pullbacks here, so we're going to try to attack a trend now and go long for the first time today. Start 2 contracts, maybe add to it a little bit if we dip a little bit more. There we go. Beautiful bounce. We're flat on the day now. Alright. Right, for sure, Sam. Exactly. As long as you have a reasonable thesis, like, do whatever. Again, we're back to flat on the day. 2 minutes left, chat, until the PMI data comes out. 2 minutes. We got 3 contracts here. Definitely struggling to be profitable today, but all right, so we're finally green of the day. We're up 35 bucks. We're gonna see if we can roll this into a couple hundred. SPY bounced right at the VWAP, which is what we tried to time there, and we did catch it. Again, though, honestly, if I just stuck to my own, like, the indicators that I programmed here, look at my SPY, right? Like, genuine, like, what do you guys think about this? Genuinely, what do you guys think? Like, look, here is my indicators. Like, look, here's the SPY. Like, so this is, so if it's a reversal pattern, this will show up. And if it's a bullish reversal, this one will show up. You know, so since the opening bell, it's 2 for 2. This one, it's you could say it's right or wrong, but look at these two. All right, like look at that. Literally the bottom, literally the top candles. So 1, 2, 3, 4, 5. So it's 80%. And this one was close too. Like this one was close. I've never really tested it on a 5-minute chart though. Let me see. 5-minute it looks less effective, but a 1-minute chart looks good. Hmm. 1-minute chart looks very good. What do you guys think of this? All right, guys. ISM PMI data coming soon. All right, guys. We got 6 minutes. I would short right now, to be honest, but I think I'm a little bit late in the short, and I think the data drops in 6 minutes. What's your predictions for the PMI data? Again, ISM PMI data is expected today at 48.8. Put that on screen so you can see it. Why do you trade gold if you have no idea what to do with it? It's like playing poker with your buddies. You have to pay to play and pay to learn. 100%. You have to have real experience. But I don't think asking somebody in a YouTube stream whether they should buy or sell gold has any type of significant like reason or justification. You know, I think it's just random, and you know, if you're asking random people, just learn yourself, you know. All right, guys. 4 minutes here. 4 minutes. Be ready, guys. Hit the live button next to the play button. We're also testing highs right now, which I'm going to go ahead and short this now because we're close enough to it. We'll add a little bit more. We're close enough to this report where I think we could get like some choppy behavior, but it could also go the other way on me too. Flat. This is getting way too close to highs for my comfort. Yeah. Back and forth day for sure. Even though the SPY is pretty green. Should have just done easy VWAP bounces like this, which work very, very well. Should have just followed my own indicators too. NASDAQ looking very strong. Probably Nvidia dragging this up now. All right, guys, 3 minutes. Yeah, we're going to put it in sub-only mode as well, chat. There you go. NASDAQ ripping up ahead of this report. We got 2.5 minutes left. Let's see if I can take advantage of extension on the upside short term. There we go. Back down to flat right before this report. I might add a little bit more too, see if we get another one more burst down. We have the room for it. There it is. All right. All right, so we're back up to $21 a share. So somehow we're green after all this, but report drops in 2 minutes. I don't want to play with this. I wonder what that likelihood is ahead of reports to attack choppy behavior. I'm sure like right before the report, like minutes, you know. Those have been my best trades, like right before reports dropping. Tesla at 229s. All right, guys, here we go. 1 minute. Yeah, and it looks like my little indicator was right too. It's a big range though, so you just got to be willing to play the range. All right, guys, 1 minute here. 1 minute. All right, here we go, guys. 30 seconds, 20 seconds. All right, 15 minutes or 15 seconds. All right, and here's the report. Let's see what it does to the market. ISM PMI showed up, guys, at 46.8, lower than expected. A weaker manufacturing sector than anticipated. 46.8 versus 48.8, lower than expected. ISM prices showed up higher than expected, signaling maybe potentially worse inflation problems. Higher than expected ISM prices, lower than expected ISM manufacturing strength. And so, yeah, worse than expected for sure here. Market initially reacted negatively, though. Might be bouncing back. All right, we are dumping down a lot on this report. SPY all the way down under VWAP, under 200 EMA. See if we bounce. Very choppy morning. Pulling all the way back down to the SPY. Big downwick pressure showing up. Try to buy this. All right, so we're up about 50 bucks. Small gains now. Yeah, so I'm checking this indicator that I built. Back to the top of the range here. Very sideways still. All right, up 60. Small little baby gains. Yeah, I mean, Lexi, you know, okay. The weak manufacturing data, like, again, I can tell for whatever reason you're rubbed the wrong way because I'm telling you that economic data signals too much inflation problems and not recession risks like you keep saying. But again, the part you're missing is that the market is mostly not liking this report, specifically because ISM manufacturing prices were decently higher than expected, which means what? Which means inflation, right? Which means what? Which means that cutting rates is a bad move. At least cutting rates multiple times. Again, I'm okay with a slight rate cut next in September next month. I just don't want consecutive rate cuts, you know. What do you guys think of this? So again, here is a script I'm working on. I don't want to show you the script, but I call it the 1 minute killer. You know, let me check the queue. I call it the 1 minute killer, right? I don't want to show you the script. Let me rename this so that you can't see the script. It's non-repainting, so I made sure not to repaint it. All right, so it's only really a 1 minute indicator. Well, let me. All right, so here is the NASDAQ script. They do not repaint, so it doesn't repaint. Follow through, red, follow through. You got this one, bounce. Oh, that's a little early to see it during actual market hours, though. And again, I programmed it to show up the minute afterwards. That's the first one that didn't work right here, is this one. It's the only one that didn't work. Tesla just rejected heavily off of the previous closing price. But yeah, what do you guys think? I call it the 1 minute killer. You know, look at this one. You know, it does really good at predicting like tops. This one's wrong too, but this one worked. This one, maybe you could call it working. This one worked. This one worked. Seems to work really well in pre-market too. Like, look. Yeah. Decent, I think. Decent. And again, remember, guys, I put up this script here. So remember, I put up my script and I showed you this script, very similar script, 20 minutes ago. I showed you the same thing. What did the script I showed you show? Bear signal fall, so I'll take it. We're doing okay. We'll keep developing stuff here. Well, I'm still developing it, Blaze. Why don't you want rate cuts? Because it'll make inflation worse. Like, my rate cut fearing has nothing to do with again, it has nothing to do with anything stock portfolio wise, and more so to do with inflation fears. I fear inflation spiking up 10%. Again, you know how many people have come to me since I run like a community like this and been like, yo, prices are so high we can't afford anything. Like, that's the reason people are genuinely unhappy. When I look at people that aren't as comfortable in life as I am, a lot of them are really genuinely struggling, and again, lenders and banks have convinced people that rate cuts are going to somehow make them better, and that's wrong. It's the opposite. It's going to make things worse. In fact, the only real way to get rid of super high prices is to go into a recession. And so even if we did hit a recession, in my opinion, it wouldn't be the worst idea, because prices need to correct after 2020 and the massive spikes to inflation we got then. But again, that's my stance. Everybody's different. If you work directly with lending and you benefit from low interest rate environments, like if you're a lender, you're going to want rates to be cut. Right, but rates are going to be cut on the backs of all the working class people who are going to have to pay obscenely higher prices if a low interest rate environment maintains for the future. It's just going to be worse. And I talk about this every day. It's a good conversation because it's important. I also think it helps people understand economics. And again, rates aren't super high. Rates are 5.5% right now. If you've only done business or really watched rates over the past 10 years, you're going to be saying, wow, that's so high. But again, nobody looks at just a decade. We have to look at the big picture here. In terms of economics, you have to look at the big picture. And the big picture is that in the 80s, rates were 15%, 20%, sometimes they were over that. Somebody said 21% earlier, and so 5.5% relative to that's not the end of the world. Well, why do you think people who can't decide if they want gas or something to eat want rate cuts? How do you think rate cuts in that regard are going to help them free? It's going to make those things more expensive. It's going to make those sandwiches more expensive, brother. It's going to make food more expensive. Like cutting rates is going to make food more expensive, not less expensive. That's my point. Yeah, I will agree. Quantitative easing and the low interest rate environment post 2020 is what got us to where we are now. That's definitely what happened. And so if we do a rate cut, even maybe 2, if it's only 25 basis points, like if we only cut by 50 basis points, I'm okay with that, as long as we don't inject liquidity through money printing and QE. Like, I'm okay with it. But I'm worried that we're going to start cutting and then we're going to keep cutting all the way down to like 4 or something, and I don't think that's a good move. It's in one ear and out the other. I swear they aren't even hearing what you say every day. The only argument against you is people with high credit card debt might overshadow raising prices. Sure. And again, it's a difficult thing to understand because you get pressure from both sides, right? You get pressure from lenders and banks. They want low interest rate environments, So of course they're sitting there saying, "Hey, help the people, cut interest rates." And it's like anybody that understands what that's going to do is going to say, "Hey, well, isn't that going to make prices higher, not lower?" But it's a good conversation. I think it helps people understand economics better and the Federal Reserve's purpose and what they do, and the consequences of everything. You know, if you keep rates high for too long, we do go into recessions and depressions. But you know, historically, that's like keeping rates high at like, you know, 8%, 9%, 10%, higher than that, right? That's when we hit deep recessions and stuff. Not necessarily 5%, you know. 5% objectively, it's higher for sure over the past decade or two. But whether it's conventionally high is, I don't know, arguable. ISM prices came in at 53. Yeah, I didn't mute you, Tony. I mean, I see you talking. Congress should not be allowed to have a deficit. Yeah, I mean, I agree. You know. And again, I'm not mad at you if you disagree with me. Again, it's an election year, right? So what do you get during election years? We say this every day. And again, I'm not against you. If you think I'm against you politically, you're not paying attention. I'm not against you, right? I just don't root for either side like it's my football team. Like, I try to look at policies and data, you know. The problem is it's a political year. It's an election year. And so during election years, something that is absolutely consistent is that both sides push people in different ways, right? The side that is the current administration is going to try to say, hey, things are the greatest they've ever been, right? Look at everything good. Look at the economy. It's great. The side against that side, the side that is running against the current one, is going to say, hey, it is the end of the world. Look at how bad everything is. Look at how terrible the economy is, right? And so people kind of parrot that. And so those are the ones that are like, things are so horrible right now, because they're watching like the news, you know, and the news might be trying to make you think it's the worst. Usually the truth is somewhere in the middle, right? Usually the truth is like both of them are kind of wrong. Like right now, the economy's okay. Too much spending has happened. And so people aren't necessarily happy, but it's not like it's not like 2008 at all. You know, GDP is positive, and you know, people are working. Unemployment's at roughly 4%. So like, it's really hard to argue that we're in a recession or we're close to it at unemployment with unemployment at 4%. Especially like referencing a weekly jobless claims report. Like, this is a weekly report. It's gonna go like this. It's not just gonna go up or just go down. It's a weekly report. It's gonna go like this. You know, if you look at unemployment, it's at 4. And again, I'm not against anybody, guys. Like, maybe I'm wrong. And again, maybe we are going to hit a recession sometime soon. I really don't know. But I'm scared of prices spiking up again, is what it really is. And I think y'all should be too. Like, you all should be scared of price spikes. Because if prices spike up again, we're in a really tough spot. Like, really, really tough. If you think mild recessions are bad, imagine not being able to afford like regular things. Even if you make $200K a year, you're still not able to afford things, right? And we're already close to that now. But if prices spike up another 10% plus, like, people are genuinely going to be, everybody's going to be struggling. So look at the housing market. The housing market is up almost 60% in the last few years. You know, residential real estate is up almost 100%. You know, so like, I get it. People don't want to buy a house right now because interest rates are higher than they have been, and a lot of people are locked into low rates. But real estate has gone up, almost doubled since 2021. You know, so I mean, we can say it's in just some horrible spot because interest rates have been high for about a year. But honestly, they kind of need to be. Real estate can deal with a correction. It kind of needs it, to be honest. Again, I say this every day. Maybe not double. They're probably up 60%, I think. Like, look. How much has real estate appreciated since 2020? All right, let's wait. Since 2020, real estate prices in the U.S. have seen significant appreciation. The S&P CoreLogic Case-Shiller National Home Price Index, a prominent measure of housing, indicates a substantial increase. As of May 2024, it represents an approximate increase of over 50% in home prices over the past 4 years. 50% in 4 years. It's, again, that's a lot. That's 12.5% a year appreciation on average since 2024. You know, if you want to see a graph, I could show you a graph. Houses are not selling, builders are taking losses. Right, but again, Lexi, the problem here, again, and this is an interesting conversation. The problem is that that's necessary sometimes. Like, housing has to correct. If prices go up 12.5% a year, nobody's going to be able to afford anything within 10 years, you know? And so it's necessary for interest rates to be high sometimes. It's necessary for the real estate market in general to correct. If it doesn't, we're in a really bad spot. Nobody's going to be able to afford anything. And that's already kind of the situation now. And so again, if prices have gone up this much in just a few years, they need to correct. They need to come back down. Like, this isn't an argument to cut rates and cause prices to spike more. Again, that's going to be much worse. You know, and sure, real estate agents are unhappy. Lenders, builders are unhappy. Of course they are, you know. But again, sometimes that is necessary. It's not sustainable to just keep a low interest rate environment and let house prices appreciate, you know, 10, 20, 30% a year. I get it why some people want that, but it's not sustainable. And it's never going to be, you know. Anyways, good conversations. It's all good. Even if you disagree with me, it's all good. Look at lumber and copper prices. Yeah, I mean, but again, those are necessary sometimes too. I get it. People want them to go straight up. And so, like, again, lenders, real estate agents, they've convinced everybody that, hey, we need low interest rates. But again, that's going to be on the backs of everybody else. I'm just telling you, that's going to be on the backs of everybody else. It's all love, though, guys. Hey, if you haven't already, hit the subscribe button, hit the notification bell. We'll be back later on today. Later on today, we have the Apple and Amazon earnings. We'll stream both of them. We'll be around the closing bell when they drop live, as we always are. Be ready. I'll see you guys later. Y'all be good. I love you all. NVIDIA, break it down here. Can we hear your view on the data that just came out? Sure. So again, ISM prices showed up higher than expected, signaling worse inflation problems. ISM PMI prices showed lower than expected. So kind of mixed results. Prices were high. Manufacturing was a little bit weaker. But again, in some places, people are going to say, hey, manufacturing being weaker is better because maybe it equals lower prices. But with the prices high, I don't know. It's kind of up in the air. Middle ground, I would say. Good and bad. With that said, though, guys, I got to get out of here. Y'all be good. Again, check out Apex if you want to help support the channel. If you want to day trade, most day traders lose. I think most day traders will lose regardless of where they trade. It's a lot cheaper to lose on Apex than it is to put up $5,000 and lose that. They give you real-time data, so a demo account's going to cost about the same, and you can get the base one for only $30, the 25K challenge for only $30 if you use my coupon code and link. They are a sponsor, though. They pay me money. I'm biased because of it. Always do your own assessment, trade everything yourself, and figure out what you want to do. They pay me money. I'm biased. Understand CFTC 4.41. But again, if you always want the max discount, you can use my coupon code BT, Beginner Trading BT on Apex. I'll see you guys later. We'll be back later on today. We'll see what tech earnings show. Again, we'll see what tech earnings show. Yeah, we're not going to spam travel. We're not going to spam random people on Twitter. That's how people get scammed, bro. Sorry, dude. I'll see you guys later. Y'all be good.